CNBC TV 18, celebrating 16 years of business leadership.
Welcome back to markets today. It was a day when the markets, along with the global winds, indicated that it has put behind the Fed rate hike fears. It's fully discounted and markets went on discounting the uncertainty and moving into the green. However, my sense is that this short covering rally is not over. The markets are still going to watch out for what the Fed says tomorrow along with its hiking action, and then perhaps there is either selling or buying to happen, short covering to happen. So clearly it's a to be continued story. Well, there are more stories, of course, that we have to chase for the moment. First it was TCS and now it's Wipro. The IT major today said it expects the recent floods in Chennai to have a material impact on its third quarter numbers. Rima Tenulkar is here with all the details of how the stock might be impacted. Rima.
Yes, after TCS, it's the turn of Wipro, which has warned that the Chennai floods will have a material impact in the company's revenues in Q3. Wipro's Q3 guidance for the dollar revenues stood at 0.5 to 2.5%. And now, because of the Chennai floods, the company said that revenues will be in the lower half of the guided range, which means between 0.5 to 1.5%. The company has also incurred a one-time cost towards the deployment of the business continuity plan, which will hurt the company's margins. The Chennai facility has 22,000 employees. That's close to about 13% of the employee base. Now, this impact on IT companies because of Chennai floods was largely expected, which is why the stock is not sold off too much in today's trade. But the sad part is that Q3 is anyway a weak quarter. There is an impact of seasonality, and now this unfortunate incident will hurt the financials even more. But again, it's just a one-time impact that the companies will have to bear.
All right, Rima, thank you so much for that. Now let's talk about banks. In a move that could increase provisions, the RBI is asking banks to provide for the 25% of the Discom debt that is not going to go to state governments under the Uday Discom revival plan. Not just that, the regulator also wants banks to provide for SDR cases. Lata, you've been talking to lots of bankers within the sector. What seems to be the sense? Are we moving towards higher provisioning then?
Yes, no two ways about that. What the RBI is saying is that under the Uday plan, 75% will be paid by the states, fine. The remaining 25, which will be converted into Discom bonds, is really the loan getting evergreened, a restructured loan. So restructured loans are NPLs, and therefore you should provide for it like an NPL. As well, in the strategic debt restructuring cases, banks have 18 months to find a new owner. Now, at the end of 18 months, if you don't find the owner, you have to provide. But the point is then, today you are paying taxes and dividend on a profit which is not yours, which probably are overstated. So RBI's point is advance the provisioning to before the SDR is actually conducted, and then if you are successful in finding a promoter, reverse the provision. Whatever the case, at this point in time, the next few quarters, higher provisioning is in the works.
All right, so that could play out on banks and the sentiment that surrounds those stocks. But let's now move on and take a look at several other stocks that were also in news today. Manglam is joining in with the list. Manglam.
Well, in terms of the stocks that were in focus today, we start with IGL and Everest Canto Cylinders. Both of them gained in today's trading session, purported to be beneficiaries of the Delhi pollution focus. In fact, Nomura came out with a note on IGL as well, up the target price from 515 to 600 rupees, while Everest Canto gained because, remember, it is a manufacturer of CNG cylinders. Praj Industries also surged in today's trading session, up about 15% after comments came in from Road Minister Nitin Gadkari that he is allowing the government, or rather the government is allowing companies to manufacture vehicles which run entirely on ethanol. Pipavav Defense also surged in today's trading session. The open offer, remember, closed yesterday. We learned from our sources that Reliance Infra has been allotted 18% out of the 26% in the Pipavav Defense open offer, thus taking its post-offer stake to 36%. GVK Power gained in trade today, after reports indicated that the 5 bidders were shortlisted for their airports business. However, the management refused to comment and the stock came down from the high point of the day. But export companies the mid-cap export companies in particular like E-Clarks, Kitex Garments and Kelton Tech Solutions as well surged in today's trading session ahead of the US Fed meet, anticipating a Fed rate hike and thus a strengthening of the US dollar, which would increase their margins. But look at Reliance Power, that was in focus today as well after the pledge was released by the promoter Reliance Infra by 1.7 crore shares, and there were large trades seen on two counters, TD Power Systems and Heidelberg Events, where nearly 1 to 2% equity exchanged hands, because of which we saw some activity there as well. Back to you.
All right, Manglam, thank you so much for that. Well, time to get some technical perspective going now. Sudarshan Sukhani is joining in. Sudarshan, I know that we're moving to a big event, so it's tough to predict technicals depending on the outcome. But nevertheless, how would you rate the Nifty's pullback?
Good evening. Markets had a good day today. Yesterday, on Monday, we had suggested that on Tuesday we should go long if the Nifty crosses 7650. That worked out, and traders should be long above 7650. Today morning, again, the suggestion was to go and take long positions if you do not have them yet. The idea was to buy the Nifty as well as the Bank Nifty, and the suggestion was that the Bank Nifty is underperforming, but we should still buy it because it could follow the Nifty. That's almost exactly what happened today. Now, as we speak, after the market's closing, the short-term trend is intact. The Nifty and the Bank Nifty are both in a buy zone. We do not know how long this zone will last and for what levels the index can aspire to, but what we know is that we should be on the long side of the market. So be long in the Nifty and be long in the Bank Nifty. For the Bank Nifty, the stops are what are for the index Nifty, 7650. So far as the index is above 7650, we should be trading on the long side of the market. Now today is a big event day, which is the Fed day. Tomorrow morning, unless the markets open completely topsy-turvy, today's analysis will be valid. My sense is that the markets will not be majorly affected by whatever happens tonight in the Fed meetings, and we should follow our own trend, and our trend, at least in the short term, is up.
Okay, that's a positive point on which to end this conversation. Sudarshan Sukhani, thank you very much for joining us, and that's it on this edition of Markets.
Have a good evening.
CNBC TV 18, celebrating 16 years of business leadership.